$2 billion. A single seed round closed July 2025, led by Mira Murati, former OpenAI CTO. Andreessen Horowitz co-led. The reported valuation? $12 billion, described in coverage as the largest seed round on record. But Thinking Machines had no broad public product in market when it landed that capital. Within months, the structure shifted. Early 2026 brought reports of co-founder departures. Barrett Zoff and Luke Metz to OpenAI, Andrew Tulloch to Meta. In a frontier AI laboratory, those are not interchangeable headcount losses. They carry system memory, review standards, and the unwritten logic behind model behavior. The money said inevitability. The org chart started to say fragility. In May 2026, the lab shipped TML Interaction Small. It proved the team could still deliver. But a single model launch does not clear the credibility questions raised by churn. So the forensic question is this: what exactly were investors and recruits buying? And what had already started slipping underneath it? The credibility engine starts before the company exists on paper. In reported context, Mira Murati leaves OpenAI in September 2024. By February 2025, Thinking Machines is founded around a focused premise. Interaction, not just model IQ, is the next control point in AI competition. That premise is specific. The lab frames interaction models as continuous multimodal collaboration across audio, video, and text, designed to reduce the bandwidth bottleneck of turn-based systems. Instead of waiting for clean prompts and delayed replies, the system is intended to respond while the user is still speaking, moving, and changing context. Early demonstrations reference real-time translation, live video understanding, and posture or behavior feedback delivered during ongoing conversation. Belief forms quickly because three forces align at once. First, founder credibility. Prior leadership at a frontier lab gives investors and recruits a concrete reason to trust execution potential. Second, market timing. Demand is rising for interfaces that feel less like query boxes and more like live collaborators. Third, narrative fit. If the platform shift is from static intelligence to fluid interaction, then an interaction-first lab appears strategically coherent, not speculative. But the same structure that creates early momentum also embeds early fragility. When credibility concentrates in a small cluster of elite builders, every departure carries outsized operational weight. Retention risk is not a side issue. It is a core systems risk from day one, especially before broad release. With this level of narrative alignment and technical intent, how does that credibility get translated into real market power so fast? The acceleration is visible in plain sight. A reported $2 billion seed at a reported $12 billion valuation pulls in a heavyweight syndicate. Andreessen Horowitz, NVIDIA, AMD, Cisco, Excel, ServiceNow, and Jane Street. Capital arrives at frontier scale. Media attention hardens into expectation, and valuation talk reportedly stretches toward $50 billion. But before the May 2026 in-house model reveal, the shipped product record is narrow. Primarily Tinker, a fine-tuning API released in October 2025. That is the asymmetry at the center of this chapter. Financing velocity and public narrative compound quickly, while externally verifiable product maturity moves slower and mostly behind closed technical milestones. This is the first blind spot. Narrative valuation can outrun operational lead indicators. In private labs, critical milestones are often non-public by design, and technical claims can be difficult to battle test until broader access exists. So outsiders price the promise, not the proof. Inside that gap, every month without visible shipping progress becomes more expensive. Recruiting pressure intensifies. Retention pressure intensifies. Acquisition interest and rival hiring campaigns increase the opportunity cost of staying put, especially for founding-level talent with portable credibility. The system does not fail from one headline. It strains when capital scale, talent mobility, and delivery opacity collide at once. Thinking Machines is not publicly traded, so there is no stock chart to force daily accountability. The accountability arrives another way, through departures, delayed milestones, and rising skepticism about execution cadence. At what point does a valuation narrative stop functioning as momentum and start functioning as a countdown? Early 2026 is where the story bends. Not because the product fails in public, but because the people holding the system together start walking out. Reports say co-founders Barrett Zoff and Luke Metz leave for OpenAI, while Andrew Tulloch moves to Meta's Superintelligence labs. No single public blow-up explains it. That's what makes this dangerous. It's not an explosion. It's load-bearing steel disappearing behind the walls. In a frontier lab, key builders are not interchangeable headcount. They carry system memory, informal review standards, and the unwritten logic behind model behavior. They know which shortcuts are harmless, which benchmarks lie, and which elegant demos can still break the moment real users touch them. When that layer thins, execution risk rises long before outsiders see an obvious product failure. The damage is structural. Interaction-first multimodal work depends on tightly coupled teams across training, inference, tooling, and evaluation. Pull core people out midstream, and roadmap continuity starts to splinter. Internal quality gates weaken. Productization slows even if the research itself keeps moving. That is why this phase lands like a gut punch. Confidence does not collapse in one headline. It erodes through handoff costs, thinner technical trust networks, and the silent tax of rebuilding shared judgment under pressure. Then comes the counterpoint. On May 11, 2026, the lab unveils its first in-house model, TML Interaction Small, framed around interaction-first multimodal processing in about 200 millisecond microturns. Backed by a multi-billion GCP infrastructure deal and a rapidly assembled team of 140 employees, the launch proves the team can still ship. But it does not automatically clear the credibility cloud created by churn, and it does not fully answer whether the control system is durable under continued talent competition. A model can demonstrate capability. It cannot, by itself, prove institutional resilience. So the tension hardens. Was this release evidence of recovered control, or a strong technical output produced inside an operating system still shaking under the floorboards? And if that question was still open, what did it mean for everything promised next? The milestone is real, and so is the suspicion. Thinking Machines now presents TML Interaction Small as a concrete step toward its interaction-first thesis. A reported 276 B-parameter mixture of experts system built for continuous multimodal exchange. On its own terms, the release shows technical direction, not just fundraising narrative. Reported performance cites around 0.40 seconds latency on FD-Bench V1 and a reported interaction score of 77.8 out of 100 on FD-Bench V1.5. Those numbers matter because they map directly to the company's core claim: reducing friction between human intent and machine response in live audio, video, and text collaboration. But forensic assessment separates demonstration from verification. These are self-reported benchmarks, and access remains limited to a research preview, with broader release expected later in the year. That means external replication is still constrained. At the same time, the company carries the weight of a reported about $2 billion seed raise at a roughly $12 billion valuation. Adding to the friction, key early team members have reportedly departed. In that context, scrutiny compounds. Not only is the model good, but is the operating system around the model durable? there is no public market price signal to arbitrate confidence in real time. So the hardest conversion metric is continuity. Can the team keep shipping, validating, and retaining critical builders across successive releases? If the product signal is credible and the structural risk is also credible, what framework should founders and investors trust before the next milestone is priced as certainty? The failure pattern is brutally simple. The product was built to reduce friction, but the company's biggest risk was internal drag. Premise: an interaction-first vision meant to remove interface friction in real time. Escalation: a reported $2 billion seed in July 2025 at a reported $12 billion valuation. Hidden fragility: continuity risk in retention and governance, where a small circle of builders holds disproportionate system memory. Trigger: early 2026 departures among key personnel, including returns to OpenAI and moves to Meta. Fallout: even after the May 2026 in-house model reveal, credibility took a discount because shipping proof arrived after structural instability was already public. That is the blind spot. Strategic, not cosmetic. Capital gets treated like runway insurance, but the real bottleneck is whether irreplaceable people stay aligned long enough to compound releases. Money buys time. It does not, by itself, preserve technical continuity or keep a lab's nervous system intact. So the practical test is tougher than hype. First, synchronize fundraising claims with observable shipping cadence so the story never outruns verifiable output. Second, build anti-poaching retention systems early. Role clarity, decision rights, incentive durability, and succession depth before pressure spikes. Third, publish milestone checkpoints outsiders can audit over time, even if access is staged. For operators and coverage teams, discipline matters too. Separate reported fact from inference. Use allegation-safe wording on personnel motives. Require manual review when claims are recent or unresolved. No public revenue or market cap data resolves this case yet. Can a company survive losing its founding DNA? So here's the final question. In frontier AI, is the real moat the model itself, or the organization's ability to keep the people who can ship the next one?